In this video, we will look at Amazon. First, we're going to look at the main segments of the Amazon business. Then, we're going to look at the recent developments, shares buybacks, stock splits. Then, we're going to look at what gurus, what super investors are buying the stock in the recent quarters. And then, we're going to come up with a fair value of Amazon stock. So, let's get started. First of all, if you are not subscribed to the channel, you can do this by pressing the subscribe button under the video. It is absolutely free and you will not miss a single new video. According to the year 2021, Amazon has three main segments. First is North America, International, and AWZ, Amazon Web Services. AWZ provides cloud-based solutions for governments, businesses, and individuals. It's the fastest growing segment of the Amazon business. For example, Nasdaq Stock Exchange uses its services, Siemens, Meta Platform, United Airlines, even Discovery Communications. A lot of big names use AWZ. Also, according to the recent quarter, this is the only segment of the business that brings positive operating income. For the last year, AWZ grew 37%, while all segments' revenue grew around 22%. If we look at their balance sheet, we can see that they have around $96 billion in cash equivalents, and marketable securities. They also have around $140 billion in long-term debt. This information will help us to determine the fair value of Amazon stock. Okay, now let's look at recent developments. First, Amazon announced that it will repurchase $10 billion worth of shares, which implies that it can repurchase around 1% of its outstanding shares, which will not help to move the stock price a lot. When a company repurchases its shares, it is a very bullish sign. Imagine that a company has 100 shares, of which you own 10 shares. So you own 10% of the company. Now the company purchased back 20 shares, so you have 80 shares left. That means that you own 12.5% of the company. That helps to increase earnings per share. As Warren Buffett famously said, if they keep doing that, I will be the last shareholder left. Shares buybacks may be a positive sign only if the shares are trading below its fair value. This implies that the management thinks that the Amazon is undervalued. So that's a bullish sign. Another positive sign is that Amazon announced a stock split 20-1. This implies two things. First, the stock will be much more affordable, and second, that the Amazon can be included in the Dow Jones Industrial Average. Dow Jones Industrial Average is price-weighted, and theoretically, after the stock split, Amazon can be included in the Dow Jones Industrial Average. So that's another very positive sign. Also, management outlined a serious risk for Amazon. It's the COVID impact. For example, will buyers continue to purchase goods from Amazon, or they will go back to real stores? The impact of COVID can be real unpredictable on the revenue of Amazon. When researching a stock, what I really like to see is that if gurus that I follow are purchasing the same stock, and if yes, at what price? And in the last 2 quarters, Terry Smith, super investor that I follow, opened a significant position in Amazon. He bought around 3% in the 3rd quarter and added another 0.5% of his portfolio in 4th quarter. The average price that Terry Smith paid for the stock was more than $3,000. So right now Amazon is trading even cheaper. So that's a very bullish and positive sign. Also, Warren Buffett purchased the stock in 2019. The average price was less than $2,000. Okay, now let's try to come up with a fair value of Amazon stock. First, we need the growth rate. The revenue growth for the last year was 22%. There are different analysts' projections. To be on the conservative side, we will use the growth rate of 18%. Also, Amazon is a maturing company, so I expect the growth to be slower. If the growth will be slower, it is reasonable to assume that price to earnings will be also lower. That is why we will take the price to earnings of 36. Okay, we have the growth rate, we have the current earnings per share, we have the future price to earnings. I use the required rate of return of 10%. I have made a separate video how to make this type of calculation. What we basically do is that we take current earnings per share, grow them using the growth rate, multiply by price to earnings, and then discount them back to today using the required rate of return. After adjusting for net debt, we get the fair value of Amazon stock of $3,200 per share, which implies around 10% upside. This means that according to these metrics, Amazon may be undervalued. Okay, I believe that Amazon is a great business. It will have a stock split. Amazon announced stock repurchases. These are very bullish signs. I see that Terry Smith entered a significant position in the recent quarters. Also, I can see that Warren Buffett owns the stock, around 0.5% of his portfolio. These are very positive signs. The downside is that there is real unpredictable effect of COVID, and the high growth is already priced in. So if Amazon will not grow at this rate, it can fall, just like Meta stock did recently. So that may be a significant risk for Amazon. Again, Amazon is a great business. There are a lot of bullish factors, but for me, I like to have a higher margin of safety. Here is the video about Google. If you are not subscribed to the channel, you can do this by pressing this button. You will not miss a single new video. Thank you very much for watching till the end, and see you in the next video.